Hello traders, Gary Wagner here, just about 11:15 in Honolulu, 5:15 in New York. It is Thursday, 17th day of May 2018, and this is the Daily Report for gold and silver. Gold closing in essence unchanged, down $1.50 at $12.90. Silver up about 6 cents, and that's the second day in a row in which we've seen higher pricing in silver, all in light with a fractionally higher US dollar, up about 10 points at 93.38. Some downside pressure in US equities, Dow closing down about 54 points at 24,713, and a nominal move to the downside in Bitcoin futures, with the CBOE and the CME closing at 82.38 and 82.05. Gold continues to trade under pressure, currently down about $1.20 at $12.9030. What is interesting in terms of today's activity is it did trade to a lower low, and now for the fifth consecutive day, we have seen gold close at a new yearly low. At the same time, we can absolutely see that selling pressure has diminished, and that is evident with this very narrow and defined trading range that gold has been in, and the fact that it has closed above the 0.618% retracement over the last two trading days. We have seen absolutely no indication that gold pricing is on the verge of a key reversal moving to higher pricing. As long as market sentiment continues under the assumption of a more aggressive or hawkish Fed that will accelerate our current level of rate hikes to more than 3 this year, we could see continued pressure in gold pricing. Therefore, my recommendation is to maintain our neutral stance with no active trades until we see gold trade off of these recent lows and actually close with a higher high and a higher low than the previous day. As far as silver goes, we are seeing some indication of a pivot point, trading now for the second day in which it appears it will close higher than the previous day. We have seen a higher high and a higher low today, and we had equal or tweezer bottoms occur on Tuesday and Wednesday of this week. Lastly, we can identify a simple candlestick pattern called a bullish harami that occurred after the strong drop in silver pricing and yesterday's price action, which in essence was an inside trading day in which the strong down day totally engulfed the price range of yesterday's trading activity. Today's higher high and higher low, as well as higher close, is a confirmation of that pattern. And lastly, I do want to take a look at Bitcoin futures. We are looking at the CME's futures contract, which is currently trading off by about $55 at $81.95. As you can see from this Fibonacci retracement that I have added, which starts at these lows at around 6,400 up until the recent highs that came in at around 9,800. We are currently at a 50% retracement, so we could easily see a further decline with major support coming in at approximately 77.65. We'll have to see if any kind of support comes in the 50% retracement area. My sense is that we will see a further decline in Bitcoin futures. Traders, although we have seen mixed signals in terms of where gold pricing is currently at, we see the potential for a bottom, but we as of yet have not seen any real indication of a key reversal or pivot. The fact of the matter is, though, that the last two trading days have resulted in doji candles. And doji candles are particularly important after a dramatic sell-off because they indicate that point in time when you get a shift from the bearish faction having control to that of the bullish faction. We'll have to see how this unfolds, but we do have the first indication that we could be seeing potential support in the precious metals markets. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.